Hello, my name is Nicole Elliott and I'm a technical analyst and private investor. And today I thought I'd talk about the stock markets because I'm sure you've seen screaming headlines in the media saying Wall Street at a new record high and claiming it's just so brilliantly marvellous. Well, I suppose it is good news, and certainly several stock market indices around the world gapped higher this Monday because of the so-called truce between Japan and the USA on reopening their trade talks or whatever it is. I mean, there's so many hopes pinned on this that I'm a little bit worried. And at the bottom of my first chart, which is a daily chart of the Dow Jones Industrial Average, you'll see I've got three different oscillators. Now, normally I prefer to look at the price action itself. Price action is the best reflection of fear and greed. But sometimes you also want to manipulate those prices and see if it gives you a bit more information if you're unsure of yourself. So the first one, the blue line at the bottom, is called the Relative Strength Index. And that's not the Dow relative to anything else, but relative to itself. And because the reading here is over 70, that means the index is overbought. So the RSI is flashing a warning saying, be careful, we are at highs and it's a bit ropey. The red line is a histogram of the Moving Average Convergence Divergence, MACD is its trade name, and you can see that the height of the columns has been dropping even as last week the Dow Jones Industrials hit a new record high. And the bottom line is momentum. It's how much momentum, how much oomph has price action actually got. And you can see that today momentum is very much lower than it was earlier this month, and it's about a third of the reading, the sort of readings we had in January. So bullish momentum is actually just not there. So now I thought we'd look at a couple of other key indices. My second one is the CSI 300. This is the top 300 companies, Chinese mainland companies, traded either in Shanghai or in Shenzhen. Again, it's a daily chart. This time I've stuck to the Ichimoku clouds and a couple of retracement support levels. And first you can see that this index has actually been rallying since the beginning of June, we have also gapped this week, gapped above the cloud. Moving averages are bullish and the oscillators are so-so. The lagging line, which is that blue line, has resistance from the top of that pale grey cloud. So there's just one little bee in the ointment, but I think this one might go higher. And my third and final chart is the UK's FTSE 100 index, which really has picked up quite a bit this week, having been boring for a while. This one, like the Dow, has the 50-day moving average above the 200 one. The oscillator, again, is very overbought on the RSI, and the bullish momentum isn't bad, but it could be better. But what I really want to show you is that the high in 1999 for this index was 6,900. In other words, where we are today, we're a mere 10% above the level it was 20 years ago. Now, I'm old enough to know that time isn't on my side, so I'm really unhappy with this index. I'll leave you with that thought.